Every IPO you've ever heard of, every billion-dollar merger, every company that reshaped an industry, there was one player behind all of it that most people never see: investment banks. The most powerful and least understood institutions in the global economy. In the next 5 minutes, I'm going to show you exactly how they work, why they matter, and why every ambitious person needs to understand this industry. Let's start with the most common misconception. Investment banking is not the same as your high street bank or your savings account. Your commercial bank, Chase, Barclays, Deutsche Bank, takes your deposits and gives out loans. Simple, straightforward. Investment banks operate in an entirely different league. They don't take public deposits. They don't sit and wait. They move. They act as agents, facilitating some of the most complex financial transactions on earth. We're talking IPOs, mergers and acquisitions, derivatives, capital markets. If money is moving at scale, investment banks are in the room. Investment banks operate on two sides of every deal. They serve both the people with money and the companies that need it. On the investor side, they offer brokerage services, asset management, market making, essentially keeping financial markets liquid, and financial engineering, where they design complex instruments to manage risk. On the issuer side, the companies, they underwrite new securities, advise on mergers and acquisitions, and help restructure corporations worth billions. And then there's proprietary trading, where the bank itself plays the market with its own capital. This is where things get high stakes. In fact, data shows that for America's top investment banks, traditional M&A and underwriting now accounts for only 10 to 25% of total revenue. The rest? Brokerage, proprietary trading, asset management. So who are the titans of this industry? It's the names you need to know. In the United States, Goldman Sachs, arguably the most prestigious name in finance. JPMorgan Chase, the largest bank in America. Morgan Stanley. Citigroup's Salomon Smith, Barney. In Europe, the lines blur between commercial and investment banking. Germany's Deutsche Bank swallowed Morgan Grenfell. Switzerland's Credit Suisse acquired First Boston. UBS absorbed Vorg. In France, BNP Paribas and Société Générale. In the UK, Barclays, Rothschild, HSBC. And from Japan, Nomura, a global powerhouse with deep roots in Asian capital markets. In the UK, only two truly independent investment banks remain: Cazenove and Rothschild. The rest, absorbed. Here's where it gets fascinating and controversial. For decades in the United States, there was a law, the Glass-Steagall Act, that kept investment and commercial banking completely separate. A firewall between your savings and Wall Street's gambling. That firewall was torn down in 1999, and since then, the merger of commercial and investment banking has accelerated at a pace that regulators are still struggling to keep up with. The result: today's banking giants do everything. They hold your mortgage and underwrite billion-dollar IPOs. They manage your retirement fund and advise on hostile takeovers. The era of pure investment banking is fading, and something far more complex has taken its place. Now let's talk about what everyone actually wants to know: the money. The revenue streams of a top investment bank look something like this: investment banking fees, M&A advisory. Underwriting, the prestigious stuff, that's roughly 10 to 25%. Commissions and fees from brokerage and asset management make up a significant chunk. And proprietary trading, often the biggest single contributor. The irony is striking: the most glamorous part of investment, banking, is actually the smallest slice of the pie. Meanwhile, so-called other revenue, net interest income from short-term loans to traders for things like short selling, quietly adds billions more. These institutions generate staggering sums. And yet in recent years, staff cuts of around 10% overall have hit M&A and underwriting departments hardest, the most prestigious divisions first. So why does any of this matter if you're not a banker? Because investment banks are the engine behind almost every major economic event that affects your life. The company you work for may have gotten its funding through an IPO underwritten by one of these banks. The merger that restructured your industry, advised by a Goldman or a Morgan Stanley. The financial instruments that your pension fund holds, engineered by teams of quantitative analysts at these very institutions. Investment banking doesn't just move money, it moves economies. It shapes which companies rise, which industries transform, and ultimately, which ideas get the capital to change the world. That's the world of investment banking, the industry operating at the intersection of money, power, and strategy. If you want to go deeper, we're breaking down IPOs, M&A deals, and how underwriting actually works in the next videos. Follow along, and you'll understand the financial world better than most MBA graduates. It's like this video if it opened your eyes. Subscribe so you don't miss what's next. The financial world rewards those who understand it.